let's continue this conversation around the banking sector. Unity Bank is reloading. The listed Tier 2 lender reports a turnaround in full year 2018 key earnings indices and outlines positive results of new strategy direction under the current board of directors and management. Take a look at some of the key earnings indices. The Unity Bank says its loan book was up 369% last year, while impairments was down 9%. Part of the numbers released over the weekend was operating expenses cut down sharply, 17.3%, as the bank says it saved about 4 billion naira on its balance sheet. Net operating income came in much better, 110%, while the bank says it returns to 1.4 billion naira pre-tax profit within the last 12 calendar months of 2018. Gross loans came in at 44.4 billion naira, while non-interest income was up a whopping 200%. So at the end of last year, Unity Bank says its balance sheet was stronger by 50.2%. So what is reloading in Unity Bank? The bank says its worst period is over as a commercial bank, and its loan book is climbing while it finished last year positively. But very important is that the toxic, or what you call the legacy loan burden in Unity Bank, are now over. So as the bank saying they're achieving this optimization of branches and leveraging the federal government and Central Bank of Nigeria's agriculture policy drives and enhanced revenue while beating costs to the barest minimum. And of course, the final point there is the recapitalization of the bank that is now in top gear. And let's throw this to Usman Abdulkadir, who is the Executive Director in charge of corporate planning and compliance. Thank you very much. Live to us here.
Thank you very
much. It's good to see you. First day, the first CEO on the show in a new month. It's good to have you.
Thank you very much.
It's a time all eyes are on banks because of your earnings. So this is not surprising that the slew of positive earnings that we've seen so far for last year, Unity Bank is sharing these positive numbers.
Absolutely. This, I would say, is a culmination of a number of things Unity Bank has done. We are all witnesses to how the banking industry in Nigeria has changed. It has become increasingly more consolidated. We have just witnessed the first bank merger among the top 5, 6, or 7 banks. I mean, Access and Diamond Bank have combined. This has signified a change in dynamic, whereby we see a consolidation of the big lenders. And then on the downside, we are also witnesses to the increase in fragmentation of those institutions. Newer entrants have come in. The entrance of the fintechs have also added to the new dynamic at the lower end of the industry. So what has Unity Bank done? Recognizing the increase in difficulties of the small lenders to compete at the very top of the ladder in the industry, banks have to focus on their competitive strengths, which was what Unity Bank did, to focus on agriculture in particular, and then the SMEs, and then the bottom of the pyramid banking population.
Usman, you believe that there is a space in Nigeria for every size that every bank wants to play?
I totally agree with you on that. One,
because sometimes people talk just about the big banks, ignoring that the small banks or the smaller banks have their catchment area. How does it really work?
It does really work in the sense that...
How does it really work for Unity Bank?
Absolutely. If the bigger you are, unfortunately, the more exposed you are to some disadvantages. The lower end of the market may not be very profitable to the big banks because of their cost profile. But if you are a small bank with very low cost to serve, then there is a fertile ground for you at the lower end of the market. This is what Unity Bank has focused on. We believe that every customer can be turned into a profitable relationship, which is what we have justified in the 2018 numbers.
What are you doing on the ground there without giving us too much of what you call your secret, as it were? What are you optimizing here? Cost is one thing, and there's been an issue. You talk about the legacy debt that you folks have been able to clean up, and there's been a lot of work there, wearing hand gloves and hazmat and trying to clean up roaches in the loan book.
Absolutely.
How bad was it, and how much has been done to return at least 1.4, maybe 1.5 billion profit?
1.5 billion. To put it in context, in 2017, the bank posted a loss of over 14 billion, which largely was as a result of the sell-off of those legacy non-performing loans. Unity Bank at that time was the bank with the highest non-performing loans ratio, if not in Nigeria, and I mean, if not in the world, then certainly in Nigeria, where more than 98% of the loans were non-performing. That created a distortion. I mean, in the attention span of the board and management, what do? You focus on the recovery of those loans and then leave your existing customers and the increasingly dynamic industry. What would you do? So what Unity Bank has done is to package all those non-performing loans and sell them off to a private asset management company and then focus on the core business of resuscitating the bank.
And you seem to have done this without so much news on the pages of newspapers, like a few others.
Well, you know, as a bank, we are subject to the regulation of the central bank, and this sale, it was more important to get the buy-in of the regulator, who need to be assured that everything was done above board. That was done to the satisfaction of the central bank, and I think this is the reason why the bank can now channel its attention into growing its business. You asked earlier on what we did. Other than sell-off of the loans and also management of the cost, we identified that the banking population is changing. You cannot rely on the old ways of winning the customer's business. So we had to revamp our technology infrastructure to enhance service delivery and reduce cost. So basically, those two factors resulted in the outcomes that we have seen. One, there is better customer experience. This is evidenced by a huge increase in our in-branch service transaction count in 2018. We have also revamped our technology channels. So to, again, contextualize, our card issuance jumped by more than 1/3 over the 2017 figures. Total revenue from card business jumped by nearly 75%. We also increased the number of point-of-sale terminals we have deployed by nearly 400%. Revenue therefrom grew by nearly 60%. So did the transactions carried out on our mobile platforms.
How did you get about 800,000 customers?
Again, focus. One,
well, it looks like people say, well, there's no money out there, but you folks are you're getting more money, getting more customers.
I think I will come back to the point you earlier on made, which we actually recognized for a long time. There is enough business for everybody, but not everybody's customer. I mean, not every bank will target the same customer. You have to identify who your customers are. In our competitive or niche market, I would say, which is agriculture, there are a number of customers to be harnessed. And this is what we have done. Not only were the old uncles and granddaddies we had in the farms need to be given banking services, but we have found, interestingly, that even young people are interested in agriculture. And then the value chain is so extensive. There is so much you can do within the agricultural space. And because Unity Bank has been recognized as a bank that has invested a lot of effort and created expertise in agriculture, that has attracted many people to come. In fact, in 2019, we expect to beat that 800,000 customer number.
So in terms of branch optimization, this is a bank that is retooling and reloading like firing. So you got to reload it and keep firing. So you can stop. So what do you do with the branches, as it were? You have to close down some banks. You have to rationalize. How do you move on to ramp up on these good numbers, deliver on these numbers?
What we have identified, which is quite key here, is that many of the branches Unity Bank has are located in what we call the agrarian belt. So by changing the focus of our business to focus in the agricultural space, we realized that those branches are actually quite profitable on their own rights. But then there are a few who, by reason of location, are not really optimally utilized. So we have, changed the locations of a few branches with the approval of our regulator, of course. The remaining ones is just to keep pushing and getting our staff to understand the business of our customers and then focus on that and deliver good value.
Your colleagues, the big boys, seem to be making more money doing treasury bills and other things
Absolutely.
So what are you in that? You're focusing more on interest income, non-interest income? Like you said, it's agriculture.
Yeah, it is.
So you're not neck deep in treasury bills trading just to make profit.
It is very important to do that. As a matter of fact, we have realized that there are benefits to be shared with the customers in the fixed income space.
Market, yeah.
But because of the nature of our customers, we can't do it like the big banks, the so-called huge, top 5 institutions. So what we have done is to help share our trading income with our clients by creating a brand new product, our treasury linked notes, which our simple unsophisticated customers can actually benefit from. So we index the returns of what we pay to them, to the returns we earn in the T-bills. That is a way of getting them a little exposure to the T-bill space. But as a core strategy, we really love the real sector and we love the agriculture.
Yeah, agriculture and MSMEs. How much of these policies over time has helped your bank, and what more are you looking forward to in that space moving forward?
Excellent. If you look at the history of government policies in Nigeria, I would say this government is one of the foremost, if not the foremost, government that has focused on agriculture. A lot is going on in the agricultural space, and for the first time, it is much more coordinated. So you look at the value chain, and there is a plan to realize good value in that context. Secondly, because banks have abandoned that sector completely, the central bank had no alternative but to really look at it in its developmental functions, to channel resources and try to get the banks interested. We have seen that it is actually, it co-integrates with our desire to play in the real sector, and we have keyed into that. So I would say we have seen tremendous assistance and, more importantly, direction by those two government institutions. And we expect that in 2019 and at least going forward over 3 to 4 years, that interest in agriculture would be sustained. If it is, it will help the country become self-sufficient not only in food production, but it will dramatically reduce so much effects being frittered away in important things that we can grow in the country.
Great. So your bank is back in profit. Congratulations.
Thank you.
Unity Bank is back in profit. So the next one is that you're going to be getting phone calls from shareholders when some, you know what I'm talking about, dividend will come in. You've been getting phone calls?
Well, that is a dynamic area, but we hope that in the not too distant future, we will come back to paying dividends. But of course, we know that there are some regulatory considerations relating to that. But we hope as our efforts become really entrenched, our profitability will be such that our shareholders will bear the benefits of the long way.
So how far deep are you with the shareholders' funds and trying to recapitalize?
Okay, 242 billion as of 2017, it remains flat. There are interesting points to consider in respect of that. I mean, 2019 is an election year, we know. We have seen how interest has tapered down in a number of areas relating to the economy.
So you waited for the politicians and elections to get out of the way?
Absolutely, absolutely. Our discussions had gone, to a reasonable level. We've taken the regulators, into confidence in that. But again, it's an election year, so we will not blame the investors if they have to hold on a little bit and see how the outcome would be before they come back and conclude what we have started in 2018.
But were you focusing on local, foreign investors?
A combination of both local and foreign, yes.
Big size ticket?
Absolutely.
Any figure?
Not that I will give you, because out of respect for the
investors.
That's right.
Okay. So when you get in, when you get to recapitalization, you will have to deal with a few things, because as you clean up the books and you get much healthier, you will have to face a number of issues. So the IFRS is there. And there are a few other issues, Basel III, which is also part of that, is also what you have to contend with.
Absolutely.
Are you prepared for that 2019, 2020 moving forward?
We are fully conscious of that. We have laid down a strong foundation for revamping our regulatory compliance. as well as other accounting regulations. One, there are 4 basic areas that we have focused on, which we hope to sustain through 2019 and beyond. One is entrenching a very strong regulatory compliance, which of course includes accounting and Basel III capital requirements, as we said. Secondly, we have invested in our people, and we have to upskill the skills of our staff to be able to deliver on the vision that we have. Thirdly is to strengthen our risk management. And then fourthly is to, again, deepen our technology and make sure that it works for us in the areas we have identified.
So as the environment becomes more dynamic, competition, as you said earlier in your earlier comments, is changing. So what are your concerns here as the industry becomes a bit more dynamic? Fintech is getting more penetration. The central bank wants more financial inclusion to be delivered in the next few years, much faster than where we were. So how are you folks working to make sure that Unity Bank does not slip back into previous legacy debt, kind of toxic issues of past years, and now that you have a new ocean ahead of you,
right.
You're keeping that pace up with the rest of the big boys who are making big noise on Broad Street?
Right, quite interesting. One, we hope 2 things happen. One, our regulators should make sure that our banking policy complements our economic policies. That would play out in the financial inclusion thing. We have recently seen an increase in the minimum capital base for microfinance banks and other financial institutions that are operating. I mean, people are calling for increase in the minimum capital for banks as well. What this does is to water down the benefits that have already been achieved in the microfinance banking sector. If you raise the entry barrier, players will certainly not be able to play as they want. So that will create a dislocation in the financial inclusion policy. Then the second thing is response to technology and the fintechs, as you said. What Unity Bank looks to do, which was what we started last year, is to reappraise our entire technology spend and our research and development. Should we be doing what every bank is doing, or should we look at the fintech sector as an able partner? I mean, a sector that we can do much more collaboration rather than looking at it as if it is a conflict in interest. Then. So we have a number of strategic partnerships with the fintechs, and we love those partnerships. They have helped us to sharpen our views and to also play in areas that ordinarily will require a lot of investment.
You're cutting costs, Usman. So where are you cutting costs? Are you cutting staff?
Not exactly. I would say we are optimizing our staff. The area we're looking to play more in is an area that requires certain skill sets. Faced with this problem, you have to make a decision. Should you acquire skills from outside, or should you build your skills, or perhaps do a combination of the two? So yes, staff that are not able to key into the vision, of course, have the option of looking for something else to do. But as we speak now, our staff have demonstrated remarkable resilience in reacquiring the skills that are required to help us push our vision. If we're talking about cost, basically, we love the new technologies that are coming in because they have helped us to not only reduce the cost of serving our customers, but it has also helped us to deliver better value to clients in terms of customer service. So the service experience.
Okay. So whenever you're cutting costs, don't cut TV advertorial. We need that. Don't cut your TV commercial budget.
Thank you very much.
That's a final appeal.
Thank you so
Whatever
much.
you cut. Don't cut the cost of TV commercials. We need more TV commercials here. That's commercial. Thank you.
Thank you so much.
Abdulkadir, who is the Executive Director in charge of corporate planning and compliance at Unity Bank, Reloaded. When we come back after the break, today is a big day for Access Bank. And of course, that includes his green bond, the first corporate bond on Nigeria's Market Street. Welcome, the new